last year, during the first edition of India Energy Week, we signed an MOU with, rather SOI with International Energy Agency, and it was for collaboration between two of us. And today, when we are celebrating the anniversary of that SOI, it was same day last year when we signed that SOI. We are again here together. And the objective is, what is the objective of the conference? You see the middle of the motto is collaboration. So it is basically we are collaborating with IEA for various studies, research, data sharing, analysis. So not taking much of the time, today we are here to release two documents. One is a report by IEA, which is Indian Oil Market Report 2030. And another one is PPAC Journal, which is inaugural issue we are releasing today. What is very important today is that a couple of years back, when we were seeing any international reports, we found India included in Asia. Only China was shown separately. In last few years, India has gained its importance, and India is now everywhere in separate line in all reports. What is more important, that IEA decided to release a special report on Indian oil market, and I believe, Toril, that is first of its kind that country-specific report is coming. So that is such a big importance given to India. I will not take much of the time. I will request Mr. Sadamori, who is director at IEA, to set the context so we can proceed further.
Thank you, sir, Mr. Kumar, for the very kind introduction to this IEA's work on the Indian oil markets. So following the meeting between the Honorable Minister Puri and the IEA Executive Director, Dr. Fatih Birol, it was decided that the IEA should put its expertise towards the report on India's role in oil markets. So as Mr. Kumar pointed out, this is a one-of-a-kind report, as the IEA oil reports are aggregated at the global level. And this report is specifically on India and shows the role of India will play in supplying and balancing the global markets due to its refining sector and also India's growing strength in biofuels. The Indian oil companies are on course to add 1 million barrels per day of refining capacity over this 2022 to 2030 period. And this is more than any other country in the world outside of China. And new refining capacity will exceed domestic oil demand growth in the near term, so that results in additional product supplies to the global markets. IEA analysis shows that India's oil demand will grow at a rapid pace through 2030, despite the increased efforts to accelerate the clean energy transitions. And India, so the fastest growing and the most populous economy in the world, is set to overtake China in terms of the annual oil demand growth, additional demand, by 2027. And biofuels plays a key role in India's efforts to decarbonize its transport sector and to become the carbon neutral by 2070 target. I now hand over to Ms. Toril Bosoni, the head of the oil industry and markets at the IEA, for the launch of this report. So Toril, the floor is yours. Thank you. Thank you.
We are waiting for additional director MOPNG for physical release. But before that, we will try to understand from Toril Bosoni that what is there in this report. Actually, many of you must have met her last year when she came to India to release the world report of the similar kind. That time only India was mentioned briefly. Today she will be talking about India only. Thank you.
Thank you, Dr. Sharma. Good morning, everybody. It's a delight for me to be here back in India so soon. Only 6 months since my last visit, and this time with a specific report on Indian oil demand. So we're looking at India's role in global oil markets for the remainder of this decade. And of course, it's no surprise that India's role would increase rapidly from now and continue as it has been, but towards 2030. As Mr. Sadamori said, India would overtake China as the largest source of growth. Yes. The growth would come primarily from gas oil, it's accounting for more than 50% of the gains, and roughly 20% of global oil demand growth over this period. As we heard, Indian energy companies are targeting additional refining capacity. That refinery capacity will ensure that India meets not only its domestic oil demand needs, but also maintains its positions as a key exporter of refined fuels. So just quickly, crude oil production expected to continue to decline in the near term. That has implications for imports, of course, and with significant implication also for India's energy security. So just quickly, as I said, India is set to lead oil demand growth to 2030. And where we see last year when I was here, we noted that the global energy crisis has put energy security on the top of political agendas. This is of course important to India as well due to its high import dependency, but the crisis has also boosted the acceleration in clean energy transition. So for the first time, IEA sees a peak in global oil demand in all of its scenarios before 2030. But that oil demand is moving at different pace, different products, different sectors, and different countries, of course, as countries are continuing their transition paths from very different starting points. So this is where India comes in, and you can see here that it is the fastest growing country as oil demand in developed countries and China slows and then goes into decline. India becomes ever more important. So Indian oil demand, we projected to increase by 1.2 million barrels a day over this period from 23 to 2030 to reach 6.6 by the end of the decade. And as I said, the industrial expansion means that gas oil diesel will be the strongest growing fuel. Gas oil diesel has a much higher share of Indian oil demand than in other countries already, but it will be the largest source of growth. We also see strong growth in LPG as petrochemical investments continue. And also, as with further gains in clean cooking initiatives set in motion by the government that will further boost LPG growth. Jet grows modestly, and you see to the very end that we see marginal decline increase in gasoline, and that is because we see EV uptake, especially for 2 or 3 wheelers, increased biofuels, and significant increases in efficiency eating into this segment of oil demand. So just a few words on how we see electric vehicles impacting oil demand for India in this period. We estimate that electrification would displace more than 200,000 barrels a day of oil demand by 2030. This is mostly gasoline because we see higher rates of electrification in the 2 and 3 wheeler segments. So in 2023, about 3.5 million electric vehicles were registered in India. 1.5 million of these were added just last year. So significant growth, more than 50% increase in just 1 year in electric vehicles. But as we saw, more than 50% of these were 2-wheelers, roughly 40% 3-wheelers, and electric cars only 5%. So despite recent increases, car ownership remains comparatively low in India compared to other countries. As you know, we estimated about 58 million cars on India's road in 2023. This is an 8-fold increase compared to 2000 levels, but it remains very low compared to other countries. For instance, China last year had 7 times as many cars on its road as India, which highlights the potential for further growth in Indian ownership levels. Our projections is that the car fleet would increase by 40% by 2030. So electrification will become more important towards the later end of the decades. But you see, we have a rather modest assumption, about 5% share of cars in 2030, but higher rates for 2-wheelers and 3-wheelers. The government's faster adoption and manufacturing of electric vehicles is one of the key initiatives that are supporting growth of electric vehicles in this period, but we also note that reduced sales tax and in many states owned policies are pushing electric cars and 2 and 3-wheelers into the Indian markets. A few words on energy efficiency. Noted that that's one of the key pillars of the Indian energy strategy. And here we can just see that improving fleet efficiencies are really having a significant impact in reducing demand growth. So first of all, led by the government's mandated fuel efficiency standards, improvements, and the large number of new vehicles that are coming into the fleet that are more efficient than the ones they replace. For instance, the cars that came in 2023 were 8% more efficient than those in 2015. So this is having a big impact, and the Indian fleet is less fuel intensive than comparable countries and about 20% lower than the global average. So this is already quite encouraging that we can do more miles using less fuels and to save that oil consumption. So the government's lifestyle for environment, the LIFE initiative, has had a major impact, and we're seeing that Indian vehicle efficiency gains have been resilient in the face of increasing demand for bigger cars and performance. In other countries, we see that improved efficiencies are canceled out by increased SUV sales, larger cars. So we see less of this in India. In the United States and China, 40% of efficiency gains over the past decade were nullified by sales of bigger cars. In India, this was 17%. So combined electric vehicles, energy efficiencies, and biofuels have saved will save more than 500,000 barrels a day of oil demand growth from 23 to 2030. So to put that in context, Indian oil demand growth would have been roughly 1.7 million barrels a day instead of our projected 1.2 if you didn't have these initiatives. So just a few words on biofuels. Biofuels are, of course, expected to play a key role in India's decarbonization of the transport sector. And we see that India today is already the world's third largest producer and consumer of ethanol, and with production having tripled in just the 5 years. So extraordinary success in the biofuel sectors. Now we see supported by strong political support and effective policy implementation. Last year, we see that the blending rate was already 12% in the gasoline, which is amongst the highest in the world. Achieving the 20% ethanol blending target by 2025, in the next 5 years, will be challenging, not least because of the expanding feedstock demand. But IEA is supporting India's efforts to launch the Global Biofuels Alliance, and we recently published a renewable market report and an renewable energy tracker on our website, where we would track progress to reaching not only the biofuels targets, but renewable energy targets in general. So just quickly on upstream, we see, of course, India is a relatively small producer compared to its domestic needs, producing only 13% of the supply needs in 2023, with about 700,000 barrels a day of crude and gas liquids. And we note that renewed efforts by the government have improved the contracting terms and has raised the interest in upstream investment. We expect to see continued declines over the medium terms based on the current project pipelines. Of course, if major discoveries are found in the new licensing rounds, in the new exploration efforts, and projects are sanctioned, this may, of course, very well change, but most likely beyond the time frame of this report. So just quickly, on refining, of course, we see firm capacity addition of 1 million barrels a day to 2030. We note that there are many other large refining projects under consideration, and higher capacity growth targets raised by both officials as recently as at this conference. So it's possible that if those projects move ahead, refining capacity could go beyond the 6.8 million barrels a day that we have included here. We only take in those projects that are on the way, on track to be completed, but we of course note that there are other projects. It's really the public sector companies that are driving the expansion, whereas private companies are focusing on upgrading units and decarbonization efforts. So the rising crude runs and upgrading capacity will boost production in the near term, and especially for middle distillates. This would have significant implications for trade balances. So India is set to maintain its positions as a key exporter of transportation fuels. Here I'm showing the middle distillate balances, and you can see that export potential would increase from about 700,000 barrels a day in 2023 to close to 1 million barrels a day, 26, 27, before declining as as Indian oil demand is picking up. Total net exports was 1.4, we reached 1.4, but with distillates being the biggest source. And this is really important when we see how India has become a swing supplier both to the west and the east as following the invasion of Russia's invasion of Ukraine. Just a few words on light distillates. We're seeing here, as I mentioned, gasoline demand growth is expected to grow at a slower pace than distillates. And with the increased supplies of biofuels, energy efficiency, and electric vehicles, we're seeing that the export potential of gasoline will increase over this period. And the gasoline market into which India will be exporting will become increasingly long in the coming years, but India will be near the market that sees growth, that is Asia, the Middle East, and Africa, so well positioned to continue to export middle distillates, light distillates such as gasoline. Before closing up, of course, LPG, so despite India maintaining its export potential for light and middle distillates, it remains a net importer of LPG, and this will expand in the medium term. Strong domestic demand for LPG following the Clean Cooking Initiative and also increased petrochemical demand means that Indian LPG imports have increased nearly threefold in the past decades, and we see this growth to increase to about 750 from 600,000 barrels a day in 2023 to about 750 by the end of the decades. The relative value of LPG to gasoline, jet fuel, and diesel argues for continued two-way trade over this period. So India's growth story, economic growth story, is facing some challenges in terms of energy security. We see that India was already the second largest net importer of crude oil in 2023, importing about 4.6 million barrels a day. And as refining capacity increases over this period, we see this growing to 5.6 million barrels a day by the end of the decade, which has implications for its security of the supply. So until Russia invasion of Ukraine, the Middle East accounted for about more than 60% of India's crude oil mix. But we've seen, because of the flexibility, the sophistication of the Indian refineries, they have the ability to switch feedstocks. And we've seen that Russian supplies are now taking up roughly 40% of the imports, where all other flows have declined over the same period. Looking ahead in the medium term, we see that increased supplies will come from the United States, Brazil, Guyana as major sources of growth, which may very well feed into India's increased crude oil demand. So just to finish up, so with the energy crisis and the increase in long-haul crude sources, notably from Russia, it's adding to the impetus for sustaining the country's oil, India's oil supply resilience in case of disruptions. Based on IEA estimates and methodologies, we see Indian oil stocks equating to 66 days of net import covers, with the strategic petroleum reserves around 26 million barrels a day, equal to 7 days. So it's as India's role in the global oil markets increasing over this period, and its reliance on imports also increases, it's imperative that India strengthens its resilience to improve to not only for its domestic sector, but also to ensure its role as a steady, reliable supplier of products both in Asia and in the Atlantic Basin. Thank you very much.
I'm Shantanu from Indian Oil.
Quick question.
That EV share, two-wheelers and three-wheelers,
Yes.
of overall fleet is around 18%, 19% by 2030. So, what is the approximate sales in terms of percentage by 2030? Penetration actually.
So we have for 2 and 3 wheelers today we have about 3-4% penetration,
Yeah.
and we have that reaching 20%.
20% sales.
No, share. That's the
Share.
share. Yeah.
So sales
Yeah.
probably
Yeah.
more than 550,
Yeah.
around 80%.
I don't have. I can get back to you. I don't have the numbers right here. Sorry.
Thank you.
I think you are mistaking. It is not percentage of total stock. It is percentage for that year sales.
No, sir. That is percentage of total stock. Percentage of total sales should be around 80%. Only in that case we can reach 18%.
We will
And if it's 18%, then MS demand will be more than the projection.
Yeah.
Hello. Very good morning. I am Amit Gupta from Indian Oil. In your projection for biofuels, there is about SAF or biojet. It is very taper demand. It is. Don't you see more SAF coming from India?
Yeah. Thank you. So we see now, for the most part, we see the growth coming from ethanol, which is clearly the strongest growth. We're seeing also some efforts to increase biodiesel and sustainable aviation fuels, but for the time being, those volumes are very small, as what we can see. Of course, we know that there's a lot of efforts by many companies here in India, and this will become increasingly important towards the end of the decade when companies and countries set mandates. So we hope that this is something that's scaling up, because right now, globally, sustainable aviation fuel production potential is too small to meet the significant share of aviation. So we're waiting. We will include this once we see projects coming online and being planned. So we do see some efforts. We note that many companies here are building up capacities.
Don't see coming into real production. You still feel ki since Porsche is coming in 2027, so there is 1% mandate for SAF. So
Yes.
don't you see that coming from India? The flights will be picking it from say Singapore or Middle East.
Yeah.
So don't you see that market in India? It is very something.
Yeah.
Since it is mandated, it has to be followed.
Yes. No. So we do have sustainable aviation fuels. The Indian jet market is relatively small, so it will be. We do have this in our forecast, but we're waiting to see new production plants coming online. So, but we're happy to take this offline. Yeah.
So I'm taking an opportunity to ask you one more question. Since Russian, why is a drop in the Russian crude from 60% to 40%?
In Indian imports.
Yeah.
Wow. Maybe you're better placed to
That
answer
is why.
why
That is
Indian
what I
oil
thought that.
companies are changing. But we see that, of course, the global market is global, and we know that Indians refining companies, they're buying depending on the price. We saw that when the discounts from Indian oil compared to international benchmark narrowed, and when the price of Russian oil went over the G7 price cap, we saw a lower interest from Indian buyers for Russian crude. So, but it's moving month to month. We're seeing it depends on the pricing, in fact.
Due to reduction in overall price of crude, it has come
Yes.
down to $72.
Yes.
You think that is the reason?
Yes. So of course the decline in the overall price of crude, but also the narrowing of the discounts mean that there wasn't such a big incentive for Indian refiners to get Russian crude, and they maybe go back to some of the traditional suppliers here in the Middle East.
Thank you.
Yeah.
Hi, Toril. So I just wanted to understand about India's oil imports and your projections for 2030. So currently you said that we're the second largest net importer of oil in 2023, and from 4.6 it will go up to about 5.8 by 2030. So do you foresee, vis-a-vis other geographies, do you foresee any sort of change in the pecking order? Could India become the largest crude oil importer in the world by then, or would it still be far behind others?
It was still be far behind China in this period. Chinese oil demand growth slows and then goes into decline towards the end of the decade, but it's a narrow decline. China would still be some way ahead.
Right. And just one clarification, you mentioned about oil stocks 66 days and 7 days. So is it the projection for 2030, or were you talking about the current?
This is the current situation as we see it for India. Right. So of course, as demand and imports increase, the need for oil stocks would also increase, but we don't do projections
Okay.
there.
Thank you.
Good morning. I'm Andy Mathur from Indian Oil. Just wanted to check on the oil demand projection till 2030 because you have shown all the products, but I think LNG, CNG is not featuring there. So are you considering it as only part of the others category, or they will take some sizable proportions? Because we are betting big on gas-based economy.
Yeah. So these projections, this report is just about the oil market. So we have gas liquids when it's feeding into the demand side for oil, but it doesn't take into the gas in this report. We have special reports for gas, quarterly gas market reports that are looking out, and also the longer term projections for gas. This is just focused on oil and gas liquids. And of course, we do take into account CNG when it is displacing oil, but it's not.
Yeah. But
projections.
that indirectly actually means that LNG, CNG has been considered. That is why this kind of projection has come for oil. But specifically, those numbers are not here. Oil demand naturally gets impacted by CNG use.
Yeah. So it's also one of the reasons why we're seeing relatively slower oil demand growth for some of the fuels, because you do have this displacement effect. Same as for electric vehicles and so forth.
Yeah, I'm Neeraj Shukla from BPCL. My question is actually recently government has announced that about 800,000, that is 8 lakhs buses will be electrified. You have shown 50% growth will come from diesel. So whether this factor is considered in this? 8 lakhs buses out of total population of 12 lakhs, that is 800,000 and 1200,000. So these are getting electrified in next 7 years, and you are showing growth, 50% growth coming from diesel.
Yes.
So this factor is considered in the report, or it is the decision has come afterwards?
Yes. So we of course looking at. I showed our assumptions for electrification, and we see that especially for two-wheelers and three-wheelers, we do see significant electrification taking place, and that will impact mostly gasoline. It's displacing gasoline more than diesel. For the road, for cars, personal vehicles, we see very small share. 5% of the sales last year were for personal vehicles, and this will take time. And even if we do get high number of sales, a large share of the sales, the cars on the road will continue to use gasoline and diesel. So this is why we continue to have growth. But for diesel, it's not just diesel and gasol. We loop them together. It's not just for road transport. You also have agriculture, and very importantly, you have manufacturing and industrialization that's taking up a large share. So for agriculture, Indian agriculture represents a bigger share of oil demand than in many other countries, so that will continue to be important. And for trucking, manufacturing, industrialization, which with the rapid pace, the extraordinary growth of the Indian economy, this is what's fueling diesel and gasol demand. Of course, there's still growth in diesel for road transport, especially for trucks, where you have lesser opportunity to electrify. But this is what's driving the growth for the diesel gasol market.
So this should be the last question, I believe.
One more clarification I will seek that for gasoline you are projecting that total increase will be 0.04 Mbps, but whereas J2 will be around 0.09 Mbps. So this can only happen when electrification is probably near to 100% in two-wheelers, and at the same time electrification in four-wheelers as well as trucks or buses probably. But if you see the diesel number, gasoline number, it's increasing at a similar pace without considering much of electrification. So your projection is more bullish on electrification of two-wheelers as well as four-wheelers and not buses or trucks?
It's definitely more bullish on two and three wheelers, but we're seeing, as I just mentioned, for the diesel segment, it's agriculture and manufacturing that is fueling the growth. So that's one thing. But we have, you're comparing, so for gasoline, we have stronger growth. Here I showed you the growth, the total growth over the period. So you have stronger growth in the first half of the forecast period and slower towards the end when electrification is becoming more important. So we only have 0.7% growth on average, but it's stronger in the first years of the forecast period. For jet fuel, which is a much smaller market, we have much stronger growth rates, on nearly 7% per year. It comes out in smaller volume because India's aviation sector is still relatively modest for the size of the countries in terms of compared to other fuels. Diesel is also growing much stronger, but different growth rates for the different segments. Diesel gasol is versatile, it's used for many things, but we do think that the electrification will have a bigger impact on gasoline and the gasoline fleet than the diesel fleets. Seeing the very modest uptake of electric vehicles in the personal cars on the road today, only 5% of sales, its replacement on diesel, impact on diesel vehicles is rather limited now. But of course, the buses and trucks, it's maybe coming a bit, buses started, but trucks maybe later on.
So thank you. Thank you. And I will request DG PPAC now to talk something about this report and also about PPAC Journal, and then we will proceed with release.
Thank you, Dr. Sharma, and good morning, all of you. We will be joined by Additional Secretary Mr. Praveen Khanooja very shortly. I think he is stuck in the traffic. So as soon as he comes, we will be formally launching these two important documents. So let me tell you, I remember last year in the same India Energy Week 2023 in Bangalore, this statement of intent was signed between PPAC and IEA for two reasons. One is to strengthening the database, to create a credible and authentic database for the country and also for the international picture, and also for the joint studies, research and other areas. PPAC wanted to go in a different level. So in the last 1 year, we have been working very closely with IEA, and this particular document, which is very important for countries report for IEA is bringing out for the first time, which is a product of this statement of intent. And I am so happy to inform you that this is basically as part of the statement of intent signed by, and PPAC has coordinated this work with all the oil companies, and IEA has done this work and bringing out this, and we will be launching this today. As we all know that India is at the center stage for this energy transition, and being the biggest consumer and highest growth expected in the coming years, how important is any decision taken in India which may influence the rest of the world. So that way, IEA has taken up India's countries report. We are so glad that our industry will greatly benefit on this report. Secondly, this second document which we are producing, that is also for the first time PPAC has come out with a journal, and this will be a bi-annually. That first one will be released today, and second one will be in the month of August. And this journal we intend to have a dialogue within the industry, so that the industry, all stakeholders who are part of this industry will have a discussion on this particular subject, and will have a better understanding of the the best practices being carried out by various countries or various places. So these are the important documents, and we are happy that you all have joined here. I hope Additional Secretary is joining very shortly. So please bear with us for a few more minutes. I just got a message that he is just near to this venue, and we will be launching this two documents, and hopefully we will do it on time. Thank you so much.
So the diesel gas oil demand, the 560,000 barrels a day is from 2023 to 2030. So a little more than, it grows stronger in the first year, but diesel demand continues to grow strongly throughout the period, so roughly even. We have, the report has the numbers by year, so you can find it. It's available for free on the website. We have a few printed copies without the cover.
Toril, probably his question is about long term, although you do not deal in long term. His question is about long term diesel demand.
Long-term diesel demand. Beyond the 2030 period?
When this will peak
Yeah.
diesel demand?
Our report looks to 2030, but I think in all scenarios, India's oil demand continues to grow strongly well beyond the 2030 period. And I'm not sure that we have India peaking in any of our reports. I would have to, I think India is one of the strongest growths even through the 2050 horizon, and diesel is obviously quite important in that mix. So, but this looks to, I don't think we have the Indian oil demand peak in sight, at least not in our report.
Yes.
Sorry.
Yeah, this time for the first time we have brought out a journal which has 16 articles from various industries, sir. I think we can just...
Yeah, so with permission of Additional Secretary, we can proceed with the launch of two documents. Yeah.
Apologies, I got stuck up in first some office work and then the traffic. So, thank you.
So, two documents are placed on side table, and we will do a release of these two one by one. First, Indian Oil Market Outlook 2030. Sir, we wanted you to open this meeting, but for whatever reasons, traffic. In fact, last year we did a study, small study at our office, and we found that cities which have traffic jams, they have larger growth of petrol. Like Bangalore has bigger growth, because we are burning petrol by standing vehicles also. So now I will request Additional Secretary to, in fact, say a few closing words, and then we will close the meeting.
So it's already good afternoon. So good afternoon, everyone. Director Energy Markets and Security, IEA, Mr. Keisuke Sadamori. Ms. Toril Bosoni, Head of Oil Markets, IEA, DG PPAC, and Additional Director PPAC, Dr. Pankaj Sharma. Ladies and gentlemen, now it is my privilege to represent the Ministry of Petroleum and Natural Gas on the occasion of the formal release of this new IEA report, which is Indian Oil Market Outlook to 2030. Now, this IEA report, as I went through the report, the draft version also, is the result of a joint study between the IEA and the Indian Ministry of Petroleum Natural Gas, represented by PPAC, Petroleum and Natural Gas Regulatory Board, and the and other stakeholders. Now, it actually looks at how India's role on the global oil market may evolve over the period till 2030. Now, I have generally been very fond of the IEA reports. The data analysis is very good. The information which they give is very good, and everyone should go through these reports. Some of the points which have been mentioned in the report, as the representative of Ministry of Petroleum and Natural Gas, may not fully endorse these points, but still the analysis and the data has been presented very well, that I can say. Now, these are some jotted points, so what I'd like to add, what I felt about the report. The coverage of the report about the supplies, about the production, about the more activities which are needed for exploration. So all are very well accepted, and we are going to see a huge transition, but oil sector in the country would continue to grow at a very decent growth rate. So it's about 5 million barrels a day today, the consumption, which actually would go to about 11 million barrels per day, not by 2030, but at least by 2047, 2050. Meanwhile, the other energy sources, whether of the like EV vehicles and transportation, LNG, gas, they will also continue to grow at a very decent pace. And for India, we keep on saying that it's a fuel stacking as far as all the industries are concerned, as far as cooking is concerned, as far as other industrial sectors are concerned. So all the sources of energy will continue to grow in India because of of a very decent population which we have got, and the access and the affordability which we are planning to have for all these sectors of the society. So I'm sure that the analysis in the report would be very fruitful for all the stakeholders, including the Ministry of Petroleum Natural Gas. But this is with a caveat that many of the observations I may not agree personally, and the Ministry may not endorse them. But the report is very well done. I congratulate the IEA. Last year also we had a report here. And I would also request the IEA to have a gas report on the similar lines. This request of mine and the Ministry of Petroleum Natural Gas has been pending with IEA for about 2.5 years. So even on the global scale, they have more of gas statistics, but something like oil market report, maybe they can have a quarterly gas market report and have a gas market report 2030 or gas outlook for India till 2030, 2045, 2047, 2050. That should be done. And I would also like to inform the audience here that yesterday only we signed off 7.5 million MMTPA contract. PLL signed off with Qatar Energy starting from 2028 till 2048. So if we have more data, more analysis on the gas side also, which because IEA's major thrust, major research has been on the oil side, but gas is, if we see the energy sector in the world, gas and oil by and large go hand in hand. Volatility is by and large on the same scale, and that is why we call something a slope of the gas, which is related to the Brent. So it's better that we have more reports on the gas also, and I would be very happy because I have been dealing with gas for about 1.5 years. So I congratulate everyone involved. I thank you everyone who are here, and then I assure that we'll also go through the report again. The draft report was very nice, and then whatever inputs we can take for our policy inputs, policy intervention, we'll definitely take, and we'll be in touch with IEA and the PPAC for these analysis. Thank you very much.
Thank you, sir. We will not take more time now because next session is already delayed. Thank you everyone for joining us for this launch of two reports. Thank you.